On the last week, gold spot traded as low as 1677 and as high as 1744. Numbers are rounded and the market is closed. And on the last trading session of Friday, gold spot printed a closing price at above, little above 1730. What is worth noting that gold ended during the last week bounced off the lows and regained some momentum, and we are now trading above all the daily symbol moving averages. And the momentum is seen quite strong as long as we are about above 1728. The RSI readings are moderate in all the charts, little overbought on the monthly chart with a reading of 76. For the supports and resistance, the supports are seen about 1708, then 1680, then 1670 to 1660, then 1640 and 1600. For the resistance, is 1747. If cleared, you will see 1765, then 1800. That's all for the technicalities. We'll move on now to the economic calendar. On the economic calendar for the coming weekend from the United States, we are waiting for the following economic headers to be released. The retail sales, it's going to be released on Tuesday, then the building permits on Wednesday, and there is a very important economic header from UK. It's about the interest rate decision, and they could go negative. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again. Gold market on the last week, they did bounce off the lows that we have seen about 1670. These lows were created because of sell-off following the release of NFP and the unemployment rate. The reasons for the bounce off was as the following. The first of all, we got a revision of the numbers, and we have seen that the unemployment rate was not as released earlier. It's not 13%, but it's 17% because they have counted 5 million as employed while they were unemployed. Number two, we got fears in the market of a second wave of the coronavirus and all the implications about the coronavirus, that if there is a second wave, there is going to be some pressure on the health system. There is going to be maybe a lockdown again. All these factors help to keep the equities, US equities, under pressure, which gives some support for all the safe havens. Also, we got the statement from the Federal Reserve Bank, which stated that the interest rates are going to be low in the short term until 22. The interest rates are going to stay nearby zero, and also the overall statement was somehow dovish, and the Fed stated that they are not expecting a real relief or a real bounce off in the economy until the year 2022. All these factors all together helped gold and other classes of safe havens to stay demanded during the sell-off that we have seen in the risky assets on the last week. So what is going to happen for gold for the coming week? The coming week is going to be somehow a tricky week. There are so many factors in play, technicalities and fundamentals. First of all, and our concern is that the stock market, gold until this moment is holding up, but the gold stocks are selling off, and they are nearing very crucial support level, which if broken, they are going to sell off heavier. Not only the gold stocks, also all the US equities are going to sell off heavier if some certain support got broken. And we don't actually rule out a possibility of another sell-off similar to what we have seen on March, which could drag down gold and silver and all the other risky assets, including the currencies, the Australian dollar, the New Zealand dollar, the British pound, all the classes of risky assets and risky currencies could be seeing another wave of sell-off if the US equities continued to sell off. It's hard to tell how things are going to be the coming week. It's hard to tell because most of the risky assets, I'm talking here about some pairs of currencies, I'm talking about the stocks, they closed on March below support levels, which indicates that there could be another wave of selling later on. I'm talking now as if we are in March. Also, many managers are positioned against the stocks, against some pairs of currencies, which also suggests that another wave of a sell-off could be taking place. This is on the one side. On the other side, you have the Fed is supporting the stocks with a assets purchasing program. You have the president, Donald Trump, who wants to be re-elected again, and he considers that his achievement is a stock market rally, so he wants to support the stocks. Bottom line, if the stock market is holding up, gold is going to hold up and is going to climb higher. If the stock market continue to sell off, it will take gold sooner or later down. So what I'm suggesting to you is to skip trading next week, or if you insist to trade, look at 1745. If gold can close above this figure, let's say like above 1750, then you can go long to 1800. If it goes below 1745, it will go down to 1700. That's all for this week. Thank you guys for watching. I'll see you next week in another video.